Hi, everybody, and welcome. Thank you for joining us for today's Meet the Analyst webinar, Retail Media Essentials for Making the Most of This Booming Channel. I am your host, Max Willens. I am a senior analyst at Insider Intelligence, and I am joined today by my colleague, principal analyst, Paul Verna, who is in New York. Hi, Paul. Good to have you
Hey,
here.
Max. Thanks.
Before we get into the main presentation, I would like to thank Attain for making today's webinar possible and welcome their CEO, Brian Mandelbaum. He is joining us from Chicago. Hello, Brian.
Hi, Max. Thanks for having me.
We are happy to have you. There are a couple things before we dive in here. There is a ton of great information that we're going to share with you today, but there is no need for you to feverishly screenshot everything or to take notes the entire time. We are going to email you a link with slides and the full recording of today's presentation after it is over, but we do want you to participate. There is a chat window on the right of the video feed where you can submit questions at any time during the presentation, and we will get to as many of those as we can during the Q&A portion of today's presentation. So, Paul, let's get started.
Well, thanks again, Max. Thanks to Brian and to the team at Attain for supporting this webinar. And thanks to all of you for tuning in today. Before I kick things off, I just want to say that all the data I'm presenting is for the US market and based on our most recent forecasts as of H1 of this year. There are a couple of exceptions to that, and they should be clearly noted. So with that, let's get right to the agenda. And spoiler alert, this is less a straight agenda slide than a teaser of the topics I'll be covering and not necessarily in order. All right, so I'm going to start with our definition of retail media, and from there, segue to why it's such a big deal. I'll look at key players, market size, and how retail media stacks up against other big ad formats. I'll also delve into paths to purchase and opportunities in areas like in-store media. I'll talk about some pain points and challenges and wrap up with some takeaways. And as always, leave time at the end for audience Q&A. So let's get right into it. What is retail media anyway? Oh, and thank you, by the way, for indulging my love of the French language and of the talking heads with this title. But to cut to the heart of the question, we define retail media as ads that show up on retailers' owned and operated assets or on third-party publishers or other content powered by the retailer's first-party data. Now, those retailer properties can include websites, mobile apps, streaming services, email channels, and stores, while the offsite properties could be social networks, news sites, streaming services, and digital billboards. So the types of retailers that have media networks are all over the map. They run the gamut from digital-first retailers to marketplaces, mass merchandisers, discount stores, grocers, department stores, category specialists, and retail adjacent services like food delivery and ride sharing. And the logos on this page are really just the tip of the iceberg. It seems that almost every major retailer now has an RMN or is part of one. And Max, since you just published our retail media forecast report and you also presented on this topic just last week, what do you make of this kaleidoscope of RMNs?
I think what's really interesting is, first of all, the breadth on this page is impressive on its own, but when you consider how far out into the long tail retail media has already gone, it gets even more impressive. So there's an aggregator owned by Epsilon called CitrusAd, and they claim that 40% of US retailers are offering some inventory through their pipes. So it really does speak to just how endemic and widespread this has gotten already, and how much more growth there is in the offing.
Yeah, I'm glad you brought that up. So we're going to drill down into the complexity of RMNs a little later and talk a little bit more about just the breadth. So here's a snapshot of about 40 RMNs in some of the areas I mentioned. And again, this is not the whole universe by any stretch. Estimates of the total number of RMNs vary pretty widely, but one figure I've been watching lately is from a French startup called Mimby, and they list about 120 networks worldwide. There may be more, but the issue is which ones have the scale to make it work. I mean, theoretically, any retailer with a captive audience that's open to seeing ads could start a media network. But realistically, RMNs take time and money, and advertisers tend to support the ones that reach a big audience. So, and even those that do have scale, they still have to answer some basic existential questions like why retail media and why now? Well, for starters, there's been kind of a perfect storm of world events and industry dynamics that have paved the way for this RMN movement. So we all saw firsthand how the pandemic boosted online shopping and home delivery and video streaming, and that had a positive knock-on effect for companies selling ads on retail and e-commerce sites. Around the same time, we had the phase out of cookies and mobile IDs, and that limited the ability of social platforms and others to track users. So it really put a premium on the kinds of first-party data that retailers already had. And more recently, with social media struggling to adapt to this post-IDFA world and with traditional TV flatlining, advertisers have become even more interested in retail media. And on top of all that, in tough economic conditions like what we're going through now, marketers tend to double down on performance ads. So with all these winds blowing in their favor, it's easy to see what's in it for retailers and for marketers. So retailers use retail media to capture high margin revenue, at least high margin compared with brick and mortar and online retail sales. They're leveraging all that rich first-party data. They get to serve ads really close to the point of purchase, and they get to stretch the purchase funnel because retail media covers a pretty wide spectrum, from performance-based banner ads to video spots on streaming services and a lot in between. Now, for marketers, some of those same benefits apply. So they also get to leverage first-party data, which could be the retailers or their own. Marketers, of course, also want to be close to the point of sale. And with retail media, they can start to realize the potential of closed-loop attribution. Now, that's still a ways away from being a reality on retail media, but when it gets there, it'll help brands really increase their ROAS. So before I get into the forecast data, here's some interesting nuggets about the retail media market. So this year, it'll be the second fastest growing major ad format we measure, closely behind CTV. And by next year, it'll be the fastest growing, and it'll stay that way through the end of our forecast in 2027. We update these forecasts in the spring and in the fall, so we don't know what the fall forecast will bring, but this is what we're seeing now. So here's another really big one. We're estimating that by 2025, retail media will eclipse traditional TV, and that's huge. And by the way, Group M just put out a press release this week saying that this would happen on a global basis in 2028, but we're forecasting that the US tipping point will come sooner than that. And one more fun fact, this year, the two fastest growing digital ad businesses in the US will be retail media networks. And as a bonus, if you want to guess which ones, feel free to put it in the chat. The answer is only 12 slides away, so stay tuned. Okay, so here's a glimpse of how fast retail media got to where it is today. When we look at the timeline of when major formats scaled from 1 billion to 30 billion, and that's in the US, it took search 14 years, it took social 11 years, but it took retail media only 5 years, from 2016 to 2021. You can also appreciate from this graphic how big that retail media wave is, the red one, compared to the other two, though as a disclaimer, I do have to point out that this graph puts retail media search into the retail media category, not the search category. So with all that said, let's dive into our forecast data, starting with our estimates of top-line retail media ad spending. So here's a view of our full forecast from when we started tracking retail media in 2019 all the way to 2027. And here's where we'll be at the end of 2023 at around 45 billion. So if you look at the bookend years, this is a market that's going to grow almost by 10x, and it'll cross 100 billion by 2027. And for you eagle-eyed folks out there, In the previous slide, we said that retail media scaled from 1 to 30 billion starting in 2016, and this slide starts at 2019. So the reason for that is that we were able to estimate those earlier figures using data that we collected for the years before we officially launched the forecast. So in terms of year-to-year growth, this type of curve runs through a lot of our retail media forecasts. So we see high growth in the early years when this channel was just coming into its own, then a tapering off in the past couple of years, but we expect growth to accelerate every year through 2027, which is not something we see in other ad formats. And it's also not something we see with almost any channel that's already mature. So here's a view of retail media as a percentage of total digital ad spend. So again, we see the runaway growth here, and the rising percentage change line in blue means that retail media is growing quite a bit faster than the total digital ad market. Now, as I mentioned in an earlier slide, there are a lot of drivers to this growth, but one aspect that I didn't touch on is that retail media tracks very closely with e-commerce sales. So that doesn't mean it's impervious to other market conditions, especially in the ad world, but as long as people keep buying more stuff online, retail media should continue to over-index relative to other ad formats. So here's what our e-commerce forecast looks like. So the contours of this slide look similar to the retail media ad spending chart I showed a moment ago, except that these figures are in trillions instead of billions. And it's a market that'll grow by an order of magnitude in this time frame, with a similar growth curve as what we saw earlier, a big spike driven by the pandemic, followed by a bit of a leveling off, but very importantly, an acceleration from now through 2027. And as a percentage of total retail sales, e-commerce is going to almost double during this forecast. All right, so now I'd like to shift to some breakouts of retail media ad spending by format. So here we see the search portion of retail media, which is a huge market in and of itself. Then you layer in display, and that gets us to those top line figures I showed earlier. And it's hard to make out in a bar chart, so I'll just point out that the display share is going to rise to around 40% from 35% in this time span. And Max, any thoughts on what's behind this whole mix between search and display and what's driving the shift between them?
Yeah, I think what's important to note and think about when you think about the black portion of every bar on this chart is that display can mean an awful lot of things when it comes to retail media. It can mean video on a retailer's O&O. It can mean a video served on a publisher, a third-party publisher. It can mean CTV. And but what I imagine you'll get into very shortly is the reality that a bunch of this display growth is going to happen on site. And what we're really at the very beginning of is a pretty substantial reimagining of the user experience on a retailer's website. Get ready for more video, more display ads, more retargeting, principally to just kind of keep throwing coal into this furnace here and grow those opportunities for retailers.
Yeah, those are great points. And I'm going to come back to the on-site versus off-site topic in a minute. But first, I'm going to dig a little bit more into how retail media fits within the search market. So here's retail media search in black. Here's non-retail media search in red. And the numbers up above just indicate the totality of the US search market. So even though retail media is not yet a huge subset of search, its share is going to more than double during this forecast. And by 2027, retail media will be over a third of the total. So, of course, search is going through a ton of disruption right now with generative AI and social search, but we're confident that regardless of how those things play out, retail media is just going to keep muscling into the search space. All right, so now let's talk a little bit about on-site versus off-site. So the on-site portion makes up the bulk of the total, but to Max's point, off-site retail media will carve out a growing share with about $6.5 billion this year and over $23 billion within 4 years. And here's what it looks like on a percentage basis. So we have Offsite going from under 15% this year to over 22% in 4 years. All right, so now I want to add a little context into how retail media compares with other ad formats we track. So I just talked a little bit about search, and earlier I went over how retail media is going to grow faster than CTV starting next year and how it'll pass linear TV in 2 years. So on that last point about retail media and TV, there's still a gap of over 16 billion between them this year, which really only gives you an idea of just how fast retail media is growing relative to TV. And by the way, that leapfrogging between these two that we expect, that's the only change I think we're going to see in the rank order of these 5 categories in the next 4 years. But I want to zoom in on the whole TV retail media comparison. So here's TV ad spending from when we started measuring it in 2008, when it sat at around 60 billion. Then it peaked 10 years later at over 72 billion, and it's on its way down to below 57 billion in 2027. Now, the red line is retail media, just steamrolling right ahead. So these are the numbers I already showed, but this view really drives home how fast this growth is and what a sharp contrast there is with linear TV. So 2023 is when we have that 16 billion gap I talked about a minute ago. 2025 is the crossover point where that gap is going to be 10 billion, but in the other direction. And by 2027, that delta is going to grow to 50 billion in favor of retail media. So despite any reservations around this channel, and I'll get into those in a bit, this is a story of just tremendous growth over a large base, and it's a story of an emerging ad format that's leaping over one that had been the mainstay of advertising for generations. All right, so now let's take a look at the CTV opportunity in retail media. So these are much smaller numbers than what we just saw with spending at under $1 billion in 2023, but the growth is going to happen pretty quickly. By 2027, CTV is going to make up over 5% of retail media spending. So again, not a lot, but we think this will keep growing as more RMNs offer CTV inventory and as more brands start targeting retail media ads higher in the funnel. And also to Max's point earlier, that CTV inventory could be native to the retailer as it is for Amazon with its video streaming channels, or it could be through any number of partnerships we've seen over the past few years. And take a look at how retail media will grow within the CTV category in that blue line. So it's going to go from around 3% this year to almost 14% of all CTV ad spending in 2027. All right, so here's the moment I know you've all been waiting for. This is where we reveal the answer to my earlier question about which 2 RMNs will be the fastest growing ad businesses in the US this year. And this is where you can all imagine you're hearing a drum roll. So anyone who answered Instacart and Walmart gets a gold star, in addition to a copy of this deck and the full recording of today's presentation. But those are not the only RMNs in the top 10. So maybe to no one's surprise, Amazon is also on this leaderboard of growth, even though it already has about 3/4 of the US market, and Etsy squeezes in at number 10, which gives you a flavor of just how diverse RMNs have become. I mean, just among these 4, you have an e-commerce leader with a relatively small physical presence. You have the biggest brick and mortar retailer with a fast-growing retail media business. You have a marketplace that caters to a very specific audience, and you have a commerce intermediary that's technically not a retailer, but it still fits squarely within the world of RMNs. Here's another window into the complexity of retail media with retailers and advertisers at either end of the spectrum. But then you have a whole range of ad tech companies like DSPs and SSPs and exchanges in the middle. And I'll turn to you again, Max. What's your take on the role of those intermediaries, especially for retailers that might not have the scale to launch their own networks, but who want to play in the space?
Yeah, I think that it's the thing that you've pointed out and has been sort of humming through a lot of this presentation is really important, which is that when we look at the sort of top line numbers of the retail media space, they are shaped largely by Amazon and Walmart, who both boast some of the largest digital scale numbers of any site on the internet. But when you think about the retail media ecosystem as a whole, a lot of its players are going to wind up relying pretty substantially on middlemen to sort of help make the most of their first party data and their retail media opportunities. What's interesting is that if you look at this slide here, all the players are very similar to the ones that you would see if you were looking at, say, the open web. But because the number of players involved and the sources of supply are naturally going to be fewer, this is naturally going to be a much more orderly, I would say, ecosystem than the open web is, even though it will feature a lot of similar shaped and rolled participants.
Yeah, I totally agree. And I want to shift now to just showing paths to purchase for retail media, which is related to the conversation we've just been having. So this is a graphic we put together for our Retail Media Explainer report earlier this year. It's very dense, and I don't want to take too much time on it, but just like the previous slide, it's reminiscent of what we see across programmatic advertising. So brands and agencies have a lot of options as to how and where to place their buys, and also a range of destinations like retailer-owned digital channels and CTV and in-store and other out-of-home venues. And buyers actually are using a growing number of RMNs. So last summer, the ANA reported that more than half of the marketers they surveyed were using at least 5 networks, and some were using 10 or more. Now, as a buyer, the more RMNs you use, the more complex and costly it is to manage those buys and to measure their ROI. Now, this particular study is a snapshot in time, but I will add that a year earlier, the Trade Desk found that only 15% of brands were using more than 4 RMNs. So clearly there's some RMN inflation going on, which brings us to some potential pain points. One of them is that attribution is still more of a promise than a reality. Our former colleague, Nicole Perrin of Advertiser Perceptions, wrote a guest column in Adweek titled, "Attribution Will Make or Break Retail Media." So yeah, the headline is a bit overdramatic, but it does speak to how important and how unrealized the potential of attribution is in this space. Another area where there's room to grow is in upper funnel ads like CTV. So I showed slides that plot the growth of CTV within retail media and how display retail media is growing faster than search. And as a side note, in our definition, CTV is a subset of display. So while those figures are encouraging, it's still early days in the journey to truly expanding retail media into a full funnel format. Measurement is another area that could spell a bit of trouble for this ad channel. So as of now, there have been some isolated voices calling for measurement standards, but those voices are going to grow louder. And if you look at what's been happening in the TV, CTV space, and if you look at how a lot of retail media is dominated by walled gardens, it could be a rocky path to getting to a place that's comfortable for buyers. Another red flag is just simply the runaway growth and the rush to market in this space, which could give way to some kind of shakeout, at least among players who are on the periphery. So before I share my takeaways and turn it back over to Max and Brian for their discussion, I just want to quickly talk about the in-store opportunity. So my colleague Andrew Lipsman published a report on in-store retail media, and it showed that right now it only makes up a sliver of spending, but this graphic shows that the in-store reach of mega retailers like Walmart and Target and Walgreens and the others is just tremendous. And Andrew made a strong case that these retailers with big physical footprints have a lot of runway on which to build or grow their media businesses around that in-store experience. Okay, so that brings us to 4 takeaways that I'd like to leave you with. The first is that any caveats aside, retail media is huge, it's growing, and it's not going anywhere but up. Next is that in-store and CTV, those opportunities that I mentioned, they're small today, but they're going to scale up and they're going to become a bigger part of the mix for advertisers. And that will help retail media evolve from mostly performance-driven product searches to brand projection in the form of CTV and out-of-home ads. Now, in the spirit of pointing out potential pitfalls, I'd be remiss if I didn't reiterate the pain points I shared earlier, mainly challenges with measurement and attribution, and the cost and complexity of buying across a large number of networks. And finally, act now. Test and learn, experiment, make mistakes, and work toward making this channel serve your marketing needs. Because if you sit on the sidelines, the starting players are going to get all the glory. And on that note, Max, back over to you.
That was fantastic, Paul. Thank you very much. Before we get to your questions live, we've had really wonderful ones so far. Please keep them coming. I would like to bring back our special guest, Brian Mandelbaum, the CEO of Attain. Welcome back, Brian.
Thank you.
So I think what really leaps out to me from Paul's presentation is strong evidence that the sort of 1.0 version of retail media, the sort of sponsored search, on-site dominant spending model, is very effective. I mean, it's very easy to sort of see the ROI of that kind of spending. What incentive do RMNs have to deliver a better product if what they have works already?
Well, you made that point in saying that what they have right now really is quite effective. I mean, think about it. If we're reaching the consumer at the point of purchase or when they're making their purchase decision, it's hard not to be effective when they're sitting at the bottom of the funnel. Where we see innovation or potential challenges in retail media is as you move further up to get new customers and incrementality, we find that it's going to be more expensive for a marketer to reach that next consumer, one that's not necessarily familiar with the brand. And that is where the retail media networks need to expand their innovation to look at a wider aperture. That also means that measurement and attribution, which Paul was talking about earlier, comes to the forefront.
Yeah, I think that's a good segue into another thing I wanted to talk with you about. I mean, one thing, even just staying in the 1.0 version of maybe sponsored search, you see in that latter half of Paul's presentation that there is this real inflation in the number of RMNs that advertisers are using. And that creates a lot of problems or complexity, at least on the advertiser end. How do you, if you're an advertiser, how are you supposed to merge campaign metrics across all of these RMNs to, create a complete picture? What does that look like?
Well, at present day, it's pretty murky. I mean, if you look at the analogy of a retailer and a retail media network, it is very much the four walls in which they operate in. And if you think about and take that idea, you're really thinking about where is the interoperability between one retailer and the next. And it really comes back to starting where the consumer is and not necessarily where the distribution or the retailer is happening. If you sort of lend your eye and your mind towards where those consumers are and where they're making the purchases, it'll sort of inform your retail media strategy going forward. And you might want to complement the data that's being produced by the retailers with other channels or other partners that give you a larger lens to see the full horizon of the entire thing, which it goes back to attribution.
Mm. Yeah, I mean, talking about just the sort of different methodologies and frameworks for measuring ROI that the RMNs have. If I'm an advertiser, I want to sort of break free of that and not just take the grades that the RMNs give themselves on their homework. How do you take that purchase data and make it retailer agnostic? I mean, who really owns that information?
There's the only person that really owns that information outside of the retailer is the consumer themselves. So you need to work with partners that have access to consumer data. Attain is one of them, but there's a breadth of other companies that have the ability to really give you a merged picture of what the consumer is doing and how they're spending. And if you look at places where there's rich panels that have large depth of retailers and consumers that are using commerce and sharing that data, that's where advertisers and marketers and brands can find opportunity to really pick through and see what's being effective and what's really not.
Mm. And I guess thinking about the data that we expect that the retailers will have to share, to sort of make this business more measurement savvy, how do you propose that retail media strongholds like your Amazons, like your Targets, your Walmarts, democratize their data? Is it just about sort of keeping that consumer-centric mindset that you alluded to a moment ago?
I think it's about keeping consumer-centric mindset, but it's also about maintaining privacy. And if you think about that, it's around looking at clean rooms and ways that they can share data in a safe way that also protects their asset, which is really their customers and their purchase behavior, while also giving the advertiser and brand the access that they need. And you're seeing that actually happen in other walled gardens, like the social media networks, where they are sharing data in a really sort of asset safe environment so that people can get more comfort on their investment going forward.
Mm. A lot of this this added complexity does sound like a lot of added cost for brands potentially. And it potentially, if these costs do kind of keep ticking up and up and up, what are the sort of larger trends that you see kind of being produced as a knock-on effect from that change on the retail media landscape?
Well, the costs are going up, but the effectiveness is also going up. So if you take that as your marching orders, it actually eliminates a lot of the waste that could end up in, especially in the open web. If you use the open web as the pace car for which this gets the largest opportunity for growth after search becomes ubiquitous, this is where we see that the cost factor might create benefits to the ultimate brands to seek the fastest way of measuring a real-time outcome or return on ad spend, which is really ultimately what the brands are looking for.
Yeah, it's amazing how kind of obviously marketers have always been outcomes oriented to an extent, but just the march in that direction and the focus on that and the intensity of that focus continues to, I think, be something worth watching. I want to shift gears a little bit and ask you a little bit about how far away you think we are from an advertising landscape where there are no more third-party cookies. Obviously, this is somewhat dependent on, Google stop hitting the snooze button and everything, but how far away from that do you think we are?
I think it's at our doorstep. I think that we're seeing marketers, agencies, advertisers really over the past 6 months have a great wake-up call when it comes to what are they going to do around data, whether it's understanding identity or understanding what they can do to work within an ecosystem that has basically deprecated the cookie and most signals out of ad technology. And we're already operating in that way. I talk to marketers every single day, and it's not very often that I hear anybody really referencing the cookie.
So do you feel like advertisers are prepared for that next step, or are they still, are their heads in the sand a little bit? Where do you see that standing?
I think that there are advertisers that have not really fully appreciated the deprecation in the cookie. If you're a CTV advertiser, you pretty much have discarded the knowledge that cookie is an important factor going forward. Those that are entering the new channels, like retail media, like CTV, are the ones that are at the forefront of where the economy is going in the advertising sector.
Makes a lot of sense to me. This was great, Brian. Thank you. That's not all. We have time for audience Q&A, and we have been getting great ones all afternoon. So thank you guys again. I have a jump ball that I would like to start by throwing. This one is for Paul, but I'd like to hear everyone join in here. So how does AI factor into retail media search, or just retail media full stop? What role does that play? I'll let Paul go first.
Yeah, well, I touched on it a little bit. Obviously, AI has had a seismic impact already on the search, if not the business, certainly on the experience. And there's going to be a lot more to come. So I think the monetization questions are very unclear when it comes to AI, but what is crystal clear is that the algorithms are already very disruptive, and they're only in a maybe not even 1.0. So we're just going to see that develop and scale very, very rapidly. And I think we all have to kind of brace ourselves for significant impacts to the whole business of search, and by extension to retail media. And even though you asked the question, Max, and I definitely want to hear from Brian, but you cover AI for us. So do you have a take on this?
I think it's very early to tell ultimately where it will go, but I think what's potentially most interesting is the potential for some of these AI products to sort of do the curation and evaluation that sometimes people do on sites like Wirecutter or CNET, and it will take a lot of steps to get there, but it's not inconceivable to imagine a world where someone hops on to Bard and says, I'm going on a camping trip. Tell me the best stove, the best tent, the best hiking boots to buy if I want to spend under $500, and just take those answers and hop right in. And that's potentially disruptive to retail media, but there are so many steps, not just technological, but kind of cultural, that need to sort of weigh in as well, that it's very difficult to sort of expect that all of them will kind of be taken in short order. What do you think, Brian? What do you sort of see happening here?
I have a different take. You guys are looking at it from the consumer experience standpoint, which I totally appreciate. I take it from more of the data standpoint, which is, where does AI, specifically generative AI, apply to propensity? Does it help retailers or retail media platforms understand and predict at a very high fidelity way what the consumer is going to purchase? And if it's absent of data, how do they use synthetic data through three-dimensional vector-based models around that data to really sort of fill in the gaps of what they know about a consumer?
That's really, really interesting. So one question, this one's for Paul. Can you give the audience a sense of the market share of retail media spending among major players? I think we all know who the biggest, gorilla in the pen is, but who else is in it, and how does it shake out?
Well, I mean, Amazon in the US has 76% plus of the market, so more than 3/4 of the market. And the second top player is Walmart with 6%. So it's more than 10 times less. Amazon has more than 10 times its closest competitor share. And then the rest is just, I don't want to say long tail, because these are major players like the, Instacarts and Etsy's and Targets. But the amount that they have in that total market is still pretty small. So it's still very much an Amazon dominated field. We do expect their share to kind of inch down as other players scale up. But as of right now, and for at least the next few years, it really is very, very much dominated by Amazon.
I think that's a good segue into a big picture question, which I'd like both of you to weigh in on. So one reader writes, do you forecast a possible ceiling for RMNs that may prevent brands from launching their own? Specifically, if there's a finite number of consumers in the US and some of the largest brands already have their first party data integrated into available RMNs, will advertisers gain any meaningful incremental reach with more brands launching RMNs? I guess, Brian, what's your take on this?
It's a really good question. I think it all comes down to measurement and attribution. It's hard to make a take on that right now, where there is not a lot of interoperability between one RMN, whether it's a large retailer like Walmart or somebody who's more long tail like Etsy. But if you have that visibility, you'll be able to understand where that regression starts to hit, because there's always a finite number of people. And when there's a finite number of people, it does get increasingly more difficult to reach the next person.
I think that's right. Another question too that I think was kind of touched on obliquely many times, but just to sort of spell it out in plain English for all the attendees. And I'll ask it to you, Brian, first, since you're close to this. Why is attribution still a problem for RMNs who have the first party insights into the purchases and conversions? What is the actual kind of problem here?
There's two problems that fold. One is understanding incrementality. Is the person actually someone who's new to the forefront of buying a particular item, whether that's a SKU or going to a retailer? Like, those things are really hard because the data is really controlled by the retailer for all the right reasons. The next thing is, where is the purchase happening? Are they taking share from one retailer and moving it to the other retailer? If you look at those two things alone, that's where retailers say to themselves, where brands say to themselves, how do we know that we're getting the right return on ad spend and not just looking at one tunnel?
And I would add to that another related issue is that, retailers own a lot of this data, and that the degree to which they share it and how much they share and what specific data they share, it varies by retailer and by RMN. So that's where the lack of uniformity comes in. And for the buyer, that just kind of muddies the picture of something where they know the data's out there, but they can't necessarily get their hands on it. Or if they can, it doesn't translate across the entire space. It's specific to that retailer.
Fantastic. Another question, this one related to customer experience, which I think is really, really interesting. So the reader writes, or excuse me, the viewer writes, do you have any data or insight on customer experience? Are customers turned off or ultimately away by seeing too many ads and the very specific targeting based on data they've shared? And I think that this is a really interesting question because as I was saying before, we're really at the very beginning of retailers tapping into this opportunity from a display standpoint, both on and off platform. And nobody really knows what the ceiling is or what that shift is going to do to consumer experience. The short answer, I think, is no. But what do you guys think about this question of what this embrace of retail media does to the consumer experience?
Well, we don't have any forecasting data specific to the consumer experience, but if you think about how retail media ads disperse across different consumer touch points, they're showing up in the product searches that you do on those retail sites, but they're also showing up in a lot of places where, as a consumer, you're not going to necessarily know or associate it with retail media. I think most people don't even know what retail media is. Like when you say the term to them, they kind of give you a blank stare. So I think that actually benefits any potential effect on consumer experience, because people are just experiencing these ads. They could be on social, on CTV. So they're not tying it back to, such and such retailer served me this ad and I'm getting annoyed by how much they're bombarding me with. I mean, there is a point at which a retailer could overtax that patience, but I don't think that's a major issue, at least not right now.
Yeah, I think that makes a lot of sense. I liken it a lot to the sort of positions and economic straits that you see in the news industry. So I feel like when anyone thinks of a bad digital user experience, the first thing that comes to mind is a local news website where it's just a full frontal assault on your eyeballs, your ears, your phones, computer processors. And publishers had to do that basically because their businesses were in peril. Essentially, they had lost their print advertising. A lot of them didn't have subscriptions houses in order, and they needed to bring money in the door. And so they were sort of very desperate to do that. Whereas if you think about retailers' O&O, every square inch of that has been laid out and optimized meticulously by lots and lots of different stakeholders. And they're not going to be as kind of cavalier about stuffing those same surfaces with advertising. And so I think that to the extent that any retailer, nears that point of frustration, it's going to happen much more carefully and much more cautiously, and it's going to take place over a much longer period of time.
Yeah, there's a footnote to that, Max, and it's with luxury retailers. So luxury brands that have D2C services or luxury retailers, they're not really in the habit of cluttering their properties with a lot of ads. So they have to tread a little more carefully, because in that sense, or in that environment, a consumer would actually object to that and associate it with some kind of, disruption of the experience they're used to. So that, that's kind of an isolated case, but, luxury is not the only place where you have to think about that, but it does jump out as an area where, you just have to be extra sensitive to it.
Brian, what were you going to say?
I was going to mention that it really comes down to the points you were making around O&O versus off-platform. If you think about O&O, it is the area where you have to be the most sensitive. It is the definitively a publisher editorial strategy, right? It's you have your content and you want to make sure you maintain your audience. Off-platform, it is very much analogous to the early days of behavioral advertising. So, and that also has an experience to itself. So it's just something to be mindful of. You could be more liberal in the open web, but you have to be mindful of the fact that you don't want to bombard the consumer.
Yeah, I think that's right. I think we have time for two more, and I do want to thank you guys again because this has been a great collection of questions that you've all submitted, and excited to sort of have the conversation roll right up until our production team cuts my mic off. But I'm curious about, so there's been a lot of really great questions about in-store, which, Paul unofficially closed his presentation with. So the first question, just a level setting one, someone asks, Paul, you said in-store makes up a small portion of retail media. Someone said sliver. Do you have figures about how much?
We don't have a specific forecast on in-store, but in Andrew's report that I talked about, he talks about how it's essentially a subset of digital out of home, which in the US this year I think is under $3 billion. So it doesn't amount to $1 billion, I would say, and we're not going to see this runaway growth in the very near future. But I think the point there is that it's still an untapped opportunity. And I think Brian mentioned earlier, he made an analogy to like the four walls, and that is both figurative in terms of what you present digitally, but it's literal in the sense that when people come into your store, if you are a mass merchandiser, you already have a bunch of TV screens and you have other places where you can serve ads that are going to become more digital over time. So I think that in-store amount, whatever it is, which, again, we don't know specifically, is small, but it is going to scale.
Final question for the two of you, and I'll thank you all one last time. This is a question about, we talked a lot about measurement, about metrics, and about the challenge that poses. This is a question about Amazon. So the one attendee writes, if Amazon is the largest market shareholder, does that innately allow them to set the tone and make the rules for measurement standards and how we look at RMN metrics? I love this question. It reminds me a lot of the early days of, I guess you would call it social video, when people were looking at Facebook video and going, you're saying what counts as a view? I guess I'll start with you, Brian. Do you think that Amazon, because of its current market heft, is going to be able to sort of make all the decisions around this in the near future?
I don't. Maybe in the present day, but not in the future. You teased out exactly where I think the world is going to coalesce, which is analogous to what happened in the social media space with Meta and Facebook. There's going to be platforms, there's going to be third parties that are going to have to enter the space to provide a verified outcome and measurement to the marketer. It's the only way that you're going to create trust and accountability.
I think,
Paul, what do you think?
For all of Amazon's heft, the whole point of a measurement standard is that it has to apply across the board, or at least across a wider spectrum. So whatever Amazon decides for itself, that doesn't mean that Walmart or Target are going to be on board with it, and it doesn't mean that buyers are going to be satisfied with it. So yeah, I mean, Amazon's going to have a huge voice in how measurement plays out, but by definition, it has to be an industry standard, and they are a big player, but they're not the industry.
Unfortunately, that is all we have time for today. Thank you again to Paul for the presentation and for joining us, and a very special thanks to Brian and to the team at Attain. Thank you guys again. Our Studio II crew, the eMarketer production team, also deserve a huge thank you for making this possible. Thank you guys very much. As promised, you will get an email to today's slides along with a full recording of this session, so please keep an eye on your inbox for that. But before you go, I would like to take a moment to tell you about what's happening across our media channels. You can register for future live analyst and tech talk webinars at emarketer.com/webinars. On audio, you should definitely tune into Behind the Numbers, our daily podcast, which you can find anywhere you listen to podcasts. And finally, check out our newsletters. We have a ton of options across retail, finance, digital advertising. There is something for anyone across digital. If you haven't signed up, you can do so at emarketer.com/newsletters. Thank you again for joining us, and enjoy the rest of your day.